The Iraqi Dinar Today. Latest news. Welcome to the Iraqi Dinar Today. Latest news. Today's broadcast brings us to one of the most compelling and potentially consequential financial developments we have tracked in years, focusing intensely on the intricate machinery of Iraq's financial system. Regional analysts increasingly agree that a significant economic transition is actively underway. For a long time, the topic of the Iraqi dinar, the central bank of Iraq CBI, and the prospects of a major monetary policy shift have been subjects of widespread discussion. However, the current confluence of data points and governmental action introduces a new level of clarity and coordination unlike any period in the preceding decade, signaling that Iraq is systematically laying the foundation for a profound adjustment, possibly timed for $/math 2025. This is not a matter of mere speculation or the usual online conjecture. This analysis is grounded in tangible documented developments. Critically, Iraq now possesses one of the highest levels of foreign currency reserves in its recorded financial history. This massive financial buffer is combined with a series of coordinated measures, including sweeping government reforms, a focused push for digital financial integration, the forging of new regional and international economic alliances, and sophisticated currency management policies. All these disparate elements are converging to point toward a single, decisive trajectory, suggesting a carefully managed economic transition is being prepared for the near future. We urge you to remain with us throughout this entire segment as we meticulously unpack what this major financial pivot could signify for the country and its currency. We will examine why a growing body of evidence, including key economic indicators, strongly suggests a significant $/math 2025 adjustment period. Furthermore, we'll explore the specific ways in which the Central Bank of Iraq appears to be actively preparing the groundwork for a financial decision that, due to Iraq's role in global energy and regional trade, has the potential to influence millions of lives both within the nation's borders and across the wider international community. Grab your notes, get comfortable, and let's dive deep into the verified details of this evolving financial narrative. The current formidable financial momentum within Iraq is perhaps best evidenced by the astonishing expansion of its foreign currency reserves. These reserves have swelled to an estimated $112 billion, a figure that is anything but minor. This number represents a historic achievement and serves as a clear, irrefutable indication that the CBI has been engaged in a deliberate, long-term strategy of building robust financial strength. These reserves function as a nation's ultimate safeguard, a massive shield of stability and emergency power, which is vital for any nation considering major economic policy shifts. These financial buffers are essential for protecting the local currency from external shocks, providing the necessary liquidity to finance imports, managing domestic inflation, and, crucially, offering the central bank the financial leverage required to implement major policy decisions without succumbing to unwarranted external political or economic pressure. What makes this financial milestone even more significant is the speed and scale of its accumulation. Just a few short years ago, Iraq's reserves were roughly half of their current level, demonstrating the effectiveness of recent fiscal strategies. This surge has been primarily driven by strong, consistent oil sales coupled with the implementation of tighter revenue controls and an effective reduction in financial leakage or illicit transfers. The nation has steadily and with great discipline increased its emergency buffer funds. When a central bank achieves and maintains reserves of this considerable size, it is a universally recognized signal that they are positioning themselves for one of two things: a necessary defensive move to ward off a threat, or, more likely given Iraq's trajectory, a substantial strategic financial shift. Considering the sweeping economic reforms currently being enacted across Iraq, the significant upgrades to its digital banking infrastructure, and the structural changes being implemented in its monetary management, it is becoming unequivocally clear that this massive reserve buildup is not a random occurrence. It is the calculated, systematic preparation for a strategic financial event. This accumulation directly supports the narrative that something consequential is indeed approaching, a sentiment shared by many leading financial institutions observing the region. Furthermore, the timing of this preparation appears to align with the increasingly frequent discussions among financial insiders regarding a targeted adjustment period, potentially crystallizing around $/math mid-2025. A specific term is gaining traction and being used with noticeable frequency by highly placed financial analysts operating within the region: the fifth quarter adjustment. This term, while not a formal fiscal period, is highly significant in its use by professional banking circles. While it is common knowledge that any fiscal year officially comprises only 4 quarters, this phrase is employed informally by banking and financial professionals to denote a specialized transitional window. This period is understood to take place outside the conventional reporting cycles of a standard fiscal year. It is during this unwritten fifth quarter that central banks sometimes elect to execute significant policy decisions that, for reasons of market stability or strategic timing, are intentionally scheduled to not coincide with regular published fiscal quarters. The moment this specialized phrase began appearing in high-level banking discussions specifically connected to the Iraqi dinar, it immediately captured the attention of observers. This is because the term inherently hints at an unusual or profoundly significant action being prepared. A move scheduled within such a window typically relates to a major restructuring of currency management policy or the final preparatory stages for a fundamental exchange rate adjustment, signaling a major deviation from routine procedures. What amplifies the importance of this specific timing is the striking alignment with other major economic factors. Independent projections for oil revenue cycles, timelines for foreign direct investment, the planned rollout of digital systems, and the completion of major government contracts all point towards a synchronized unfolding of significant changes around the same time frame in $/math 2025. This broad coordination suggests a national economic strategy, not an isolated policy decision. Therefore, when you encounter the phrase fifth quarter adjustment in the context of Iraq's monetary policy, it should be understood as a specific predetermined window where the nation's central bank may introduce deep-seated financial changes that fall outside the routine published calendar. It serves as a strong indication that the CBI is very likely planning a significant action or a major restructuring event that purposefully steps outside of its usual operating routine, emphasizing the weight and complexity of the expected decision. One of the most persistent and significant pressures that is actively driving the need for this extensive preparation is the enduring and problematic gap between the Iraqi dinar's official exchange rate, as set by the CBI, and the prevailing rate traded in the parallel or street market. This persistent disparity generates acute financial stress for a wide array of stakeholders, including the average Iraqi citizen, legitimate domestic businesses, and international traders. Importers face chronic difficulties in consistently sourcing US dollars at the official rate. Local merchants struggle to manage volatile price swings, and families are often burdened by the resulting increase in the cost of essential basic goods. Even though the official exchange rate has been largely maintained at a stable level, the reality reflected in the street market presents a starkly different, less stable picture. The Central Bank of Iraq is fully aware that this untenable situation cannot be allowed to continue indefinitely. The longer this gap between the two rates persists and widens, the more challenging it becomes to sustain public confidence in the national currency and ensure long-term economic stability. This urgent need for unification is precisely why Iraq has been rigorously implementing stricter financial regulations, integrating advanced digital transaction systems, and coordinating closely with international partners and financial institutions. These comprehensive, concerted steps are designed to stabilize the national currency. Consequently, when we evaluate the prospects of a potential $/math 2025 adjustment, a major portion of the underlying motivation clearly originates from this critical internal systemic pressure. Iraq is in pressing need of a more unified, stable currency environment, and the most effective path to definitively achieve this necessary unification may well be through an official strategic monetary adjustment that forcefully guides the entire economy into a new, more controlled, transparent direction. This is a crucial element of the entire strategic plan. Simultaneously, Iraq is positioned on the precipice of enormous untapped potential for rapid economic expansion. The country's immense capacity for oil production continues to be a reliable generator of billions in crucial revenue. Major infrastructure projects are advancing across the nation. International foreign companies are steadily re-entering and expanding within the market, and comprehensive modern banking upgrades are being systematically rolled out nationwide, signaling a high level of national ambition. Central to this strategic shift is a concerted, government-backed plan to reduce systemic corruption, dramatically improve financial transparency across all sectors, and implement enhanced financial monitoring and oversight. These crucial steps are designed to strengthen the country's fundamental long-term economic foundation while simultaneously granting the central bank greater authority and agility to effectively shape and execute future monetary policy. This alignment of political will and financial strategy is paramount. When one rationally combines the overwhelming evidence of surging foreign currency reserves, the undeniable internal pressure for currency reform, and the country's vast, growing economic potential, the conclusion becomes clear. Iraq is preparing for a transition that goes far beyond any routine minor adjustment. It is preparing for a comprehensive economic reset, one that is perfectly aligned with the nation's stated long-term national development goals, making a $/math 2025 monetary decision highly plausible. When the term adjustment is used, the initial thought that comes to mind for most people is a direct change to the exchange rate. While nothing has been officially confirmed by the CBI, this remains one of the most vigorously discussed and plausible possibilities. The central bank could strategically elect to implement a modest strengthening of the dinar's value. Such a move would serve as a powerful signal of confidence in Iraq's vast reserve holdings and the overall strategic direction of its economy. A managed shift from the current rate toward a stronger number would immediately convey a message to the world that Iraq is fiscally prepared and ready to transition to a new phase of economic autonomy. It is important to note that this strategic strengthening does not necessarily imply an immediate, massive overnight revaluation. Instead, the more realistic scenario could involve a controlled, managed, and gradual strengthening process designed to carefully set the stage for future, deeper monetary policy decisions, minimizing market shock. Even a small or moderate strengthening, however, would have a significant and immediate impact on the import market, public finances, and trade dynamics. Iraq could strategically utilize this opportunity to systematically reduce its deep-seated dependency on the US dollar, noticeably improve the local population's purchasing power, and ease the chronic inflationary pressure that burdens the citizens' cost of living. If this rate adjustment is meticulously implemented and effectively managed, it has the potential to become one of the most critical foundational steps in Iraq's entire financial development history. Beyond the specific policies affecting banks and the currency itself, Iraq may also capitalize on the $/math 2025 adjustment period to strategically roll out new robust fiscal policies at the government level. With its foreign reserves now comfortably exceeding $100 billion, the country possesses substantial fiscal capacity to invest meaningfully in productive sectors. This targeted investment could encompass a comprehensive focus on agriculture, large-scale manufacturing, energy diversification, and emerging technology. Prime Minister Mohammed Shia al-Sudani plays a highly important and coordinating role in this pivotal moment. Since his inauguration, his administration has placed a consistent and powerful emphasis on modernization, transparency, and the restoration of national financial sovereignty. His government has been a staunch supporter of digital reforms and has notably strengthened cooperation between various ministries. These consistent, powerful messages are a definitive indication that the government's political leadership and the central bank's financial authority are fully aligned in their strategic objectives. Should Iraq proceed with a significant monetary step, it is guaranteed to increase global financial interest in the country almost instantaneously. A stable and demonstrably stronger Iraqi economy is a cornerstone for broader regional stability across the entire Middle East. Foreign investors have already expressed significant interest in Iraq's emerging economic sectors, including energy, infrastructure, and technology. A more stable, potentially stronger dinar could dramatically accelerate this influx of foreign investment and trade. Ultimately, Iraq stands at a profound crossroads. The nation has bravely navigated years of financial instability, political tensions, and intense economic pressure. Yet today, Iraq possesses stronger financial reserves, clearer leadership, and better technical tools than ever before to construct a stable, prosperous future. A strategic $/math 2025 adjustment, if executed with the necessary care and expertise, could definitively open the door to sustained long-term economic growth, enhanced regional influence, and a renewed, profound confidence in the national currency, marking a significant transition point in its financial history. Whether this complex process ultimately leads to a formal revaluation, the establishment of an entirely new exchange mechanism, or a fundamental shift in its monetary policy remains to be seen. But one conclusion is absolutely clear: a major financial transition is imminent. Iraq is actively and seriously preparing for a profound financial move, and the world is now beginning to pay very close attention. The next year will be critical, and the Iraqi dinar today. Latest news will continue tracking every single development with our deep analysis.